enable.
Hello and welcome to the Global Natural Resources Conclave 2018. Today we look back on the first edition of GNRC held last year and also look forward on what to expect this year as we run up to the conclave. Now, India's tryst with growth is closely linked to its utilization of natural resources. So what can India do to harness the full potential of its resources from a policy perspective? And of course, what are some of the challenges in leveraging the natural resources dividend? And of course, joining us in the studio to share with us their perspective on these issues are our partners for the summit. Let me quickly introduce all of them to you. Dr. Arunabha Ghosh, CEO CEEW, is our first panelist. Also joining us is S. Vijay Kumar, Distinguished Fellow at TERI. And we also have with us Sunil Duggal, Co-Chair of the CII Mining Committee. And for the government perspective, Saurabh Chandra, former Petroleum Secretary. And Abhijit Kulkarni, Partner at McKinsey India. And of course, we also have with us from Geneva, Roberto, Boca, Head of Energy and Basic Industries and member of the Executive Committee at the World Economic Forum. Thank you all for joining us at this forum today. The theme of natural resources and it being an important part of India's growth story continues this year at the GNRC as well. So let me kick things off by asking you, how do we go about it in a time-bound perspective, leveraging the natural resources story to drive India forward? Dr. Ghosh, let's get your starting viewpoint on this.
Gautam, very simple. To make in India, you need stuff to make in India.
Okay.
And what do? I would offer a mantra of three things. Number one, we got to significantly increase the exploration that we do for the natural resources. Number two, we've got to significantly increase the value creation of the raw resources. We often export raw resources and import the refined product. And number three, we've got to do it in a more integrated way.
All right. And Mr. Duggal, from an industry perspective, how do we go about it? And especially in a time-bound manner, that is the key word here. How do we go about leveraging the natural resources story for India?
No, actually, you know that how much of the import bill which is spent on that and what in India we can do. So out of the total mineral land we have and what is the extent to which we have explored and how much of the import bill we have. If we do the correlation with that and what we can do and how we can liberate the sector, that will open up arena for us to have the industrialization and create the employment in the country. All
right. And Mr. Chandra, your experience in government has taught you a lot of things, but for this question which has so many elements involved in it, how would you summarize what are the key things which need to be done to leverage for India to leverage its natural resources story?
India has to grow at 8 to 10%. If that has to happen, we need energy, and carbon and hydrocarbon will remain a very significant component of the energy basket.
Okay.
Given this, we need to utilize our resources more efficiently. We need to have intensive use of resources.
Okay. What's your view on that?
Well, I agree with Arunabha, that exploration is the key. In fact, I would say it's not leveraging natural resource, but actually leveraging the potential for natural resources. India has huge potential, but we have not explored, so we don't know how much we have. And unless we actually complete our exploration in a time-bound way and discover the potential, we cannot go ahead and mine. Our policy makers don't understand the difference between exploration and mining. Okay. And as a result of that, most of the policies are oriented towards the mining side, and there's not enough of policy clarity on the exploration side, which is actually the crucial part of the entire sector.
So what are the core links missing there? Because if I bring in the whole Make in India campaign, then natural resources sector is in alignment, but there are a lot of missing linkages in that story on the ground level. So what needs to be done?
You see, the world over, the natural resources story starts with exploration.
Okay.
You incentivize exploration, you allow private players to bring in technology and investment, and in return for that, because it's a lot of money that's spent on exploration, in return for that you have to give them something. You have to generally give them mining rights.
Okay.
That's the story the world over. In India, that is not there, and therefore no one is coming to do exploration.
You have something to add to that?
No, it's the policy we seem to have is you go find it, but someone else will come and collect it, and that's not going to work.
All right.
If you find it, you should have some rights to exploit it.
All right. Abhijit, you look at this practice very closely for your clients. What do you have to add to this?
Now, the crux of the matter is that you need to have a G2 explode base, right, to bring some certainty on what the mineral is. Whereas in India, 95% of the tenants that we have are not even G2 explode.
Okay.
Seismic data not seen, sediment data not seen, 2%, 5% against 90% in Australia. A simple thing like aeromagnetic survey, 90% of Australia is explored, 17% aeromagnetic survey in India is done. So I think that's the crux of it. If we look at the world outside, okay, typically juniors are the ones who come in and explore. And if you're able to give a good base data with certainty and get juniors to come in and incentivize them, a lot more can be done.
Mr. Vijay Kumar.
Yeah, in fact, I would expand on what he said. There are two aspects to it. One is the survey aspect, the other is the exploration aspect. The world over, surveys are done by governments and exploration is done by private sector. It's strange that in India, actually, not only is survey being done, but also exploration is attempted to be done. You are spreading yourself too thin. With the result, neither survey gets completed nor exploration, and we are stuck.
All right. Now, as an important part of this is also the oil and gas sector, and there is one question I want to ask, the panel in general. How far is it correct to argue that all GOI policies across natural resources sector disincentivize domestic production, and this is where the oil and gas sector comes into focus, because international prices versus domestic prices, there's a huge dichotomy there. So what do you have to think about, what needs to be done to correct that? Mr. Duggal, do you have a viewpoint on that?
So I think before that, I would also add on, to your earlier question, what we were discussing, that why we are not able to liberate that. So there are some doubts in our mind today. There is some stigma attached to the mining and the natural resources as such. So some of the past baggage which we had, and some people might have done something, and we have always been saying that we are not transparent, something has happened, Supreme Court pitch in, the government feels something different, they want to be transparent. So every now and then we are trying to change the policies, but we are trying to tweak on what others are doing, what we want to do, but there could be a need to throw away all the document and see that what is needed for India to make in India concept, and to liberate and think out of the box and what is important for the country, which could be very transparent, and it could be revenue sharing model. You can say that you can choose any block, you can explore, you mine, and you pay a percentage of that to me. The analogy between the oil sector and the mining sector is also not there. So some thinking going on there, some thinking going on here. There is no composite thinking as such on the natural resources, which could liberate us from what we can get from our resources.
All right, let me get Roberto's view in on this topic. Roberto, what do you think about this whole, the question that I had was on, there is a certain view that the government disincentivizes domestic production, and there is a dichotomy between international prices and domestic prices, and that creates a whole lot of problems. What are some of the policy prescriptions that you can offer, or some of the lessons that, globally which can apply to India, can help India improve its natural resources story? What's your view on this?
Thank you. A couple of comments here. First of all, I was wondering also in the previous conversation if we can have also a remake in India. So my point here is that we are often talking, and this conversation is very valid, what you have been talking so far about the supply side. I think it's also important to consider the demand side and how we can be more efficient. So there is an industry, there is an opportunity on the efficiency side, and more particular when we look at the mining on the circular economy. So why I'm saying remake in India, because there is a huge opportunity to leverage what is existing and repurpose or reuse in a productive way. This is together with the idea, and then I come to your question specifically. I think what is helpful for international investment and bringing multinational to invest in a country is to have a clarity on what we always talk about, the energy transition. Of course, fossil fuel are there and will be there to stay, but it's important that there is a clear destination for the energy transition and also a roadmap. So investor can have a sense of which is the direction, and so they will bring the capital.
All right, Roberto, thank you for sharing with us that. We'll take a short break on that note, but lots more to discuss on this topic when we return. Stay tuned. welcome back to this special presentation on the Global Natural Resources Conclave 2018. Let's dive right back into the discussion. Mr. Chandra, we were talking about, this disincentivization for domestic production, especially when it comes to oil. And if you look at oil producers here domestically versus, the international prices where they trade at, what needs to be done to solve this dichotomy? Because clearly there is one.
I don't think it's fair to compare producer prices with import prices.
Okay.
And it's been examined repeatedly, and giving producers import prices only give them a windfall benefit.
Okay.
What the Indian gas producer gets is what the US gas producer gets as per the Henry Hub price.
Okay.
Or what somebody in Britain would pay, the national balancing point. Similarly, what a crude oil producer would get would be similar to what ONGC would get.
Okay.
And each one of them is making significant profits.
Okay.
So a comparison between import prices and producer prices is not proper.
But what about the natural gas industry? The same situation exists there. And do you think the government needs to strike a balance somewhere, or do you think things should go as they are right now?
For the natural gas industries, a producer in Qatar would get a similar price. Why you get a higher import price is because there's a liquefaction cost of $3. There's a transportation cost. There's the insurance cost. And there's a regasification cost. So you're comparing producer prices with producer prices.
All right.
And especially for deep water, now that a price of about $6.50 per million BTU has been given, I think that's a fair price.
Okay, so no policy tweak in your opinion is required
I don't think so.
Let's move on then. Now, in this context of what we have discussed about, the policy tweaks, we have one perspective which says policy tweaks to a minimal level are required in the oil, and I am talking about the oil and gas industry. Do we have views here which feel that more needs to be done to make this industry successful? Mr. Duggal, do you have any comment on that?
Actually, as far as the pricing you said, the duty and the taxes and taxation and incentivization of I would talk in terms of what could be done in the mining sector as such. So there could be the low grade minerals, there could be deeper minerals. So how you will have a parity of the mineral which is lying very near to the ground, and with the mineral which is a low grade lying, the cost of production is very high. So some concept of the revenue sharing to make it equitable with what the different industry players will do. So depending on how much the OPEX, CAPEX is there, so it will equate them on a not only on the national front, it will also equate them on a global front also, because the royalties and duties and taxes what are there in our country are much higher compared to the global peers.
Okay.
But at the same time, the incentivizing the companies who are mining the lower grades and the deeper minerals. So in terms of conservation of those minerals and promoting the minerals which could be drawn from the deeper levels, I think some policy tweak will be required.
Quick follow-up comments. We'll go to Abhijit first, then we'll come to Mr. Jayakumar. Yes.
And just to add, but on a broader level, I think two things I like to say, right? One is just on the policy side, the center and the state both are equally important, and a good harmonization to bring a ease in doing business, I think, is very important.
Okay.
And I
what
think
is
the second one is logistics. I think a lot of it is about logistics, and investments in logistics will help drive mining growth.
Okay, Mr. Jayakumar.
Yeah, the pricing problem in the metals sector is a little different from the oil sector. The problem really is threefold. One is you have a policy of reservation of areas for the public sector, and those minerals are not auctioned, they are allocated. Then you have a policy of auctions or allocations to private sector for captive mining, and then you have the merchant miners. Now, because there is no free market for all the ore, different segments of this are getting ores at different rates, and the products that they produced are therefore competing for the same rate based on different input prices. That is skewing the market. For instance, the public sector gets iron ore at 500, 600 rupees a ton, the captive mine may get at maybe around the same rate, but if you buy it in the open market, it is 3,000, 4,000 rupees a ton or more.
So how do you gauge the success or the failure of this mining auction system which has been going on for the past 2 years? What do you have to say about that then?
No, I think one question that we have to ask ourselves, whether it's in the minerals mining side or the oil and gas side, is what is the primary objective? The primary objective to extract the resource, or the primary objective to deal with, say, improving the government fiscal resources, use it as a taxation.
Your objective needs to be clear. What are you doing it for? You need to have a clear objective,
because, for instance, in oil and gas, when the prices came down after 2014, our taxes went up, 9 times. I mean, there were 9 times that the taxes were increased, so that the government was able to secure some resources from it. But when again the prices come up, then you have to lower the taxes.
Okay.
So then you're using the sector for a different purpose altogether, and that might be legitimate. Okay. But you have to be clear about what is the objective. Is the objective primarily exploration, then production, and then revenue sharing, or is it something else?
Fair point. But we'll have to move on to the point of that mining auction system. Do you think it's a fair system?
Actually, there's a common supposition that the Supreme Court has mandated auctions, but that is actually wrong. In the presidential reference case, Supreme Court said that auctions are not the best way of allocating all natural resources, and in the case of minerals, it may actually be contrary not only to legal logic but economic logic as well.
Okay.
The Supreme Court has actually come out in saying that this is a policy decision that needs to be taken by the government.
Okay.
Now, as Arunabha said, there are 2 ways of looking at it. One is you want to maximize revenue, or you want to use mining as an engine of growth. Now, historically, in many mining jurisdictions like Canada, Australia, or various other places, actually mining is used as an engine of growth.
Okay.
Revenues do come, but revenues come by doing more exploration, discovering more minerals, and getting more revenue out of volumes.
Okay.
Now, in India, unfortunately, we now have got into a system where through auctions we are trying to maximize revenues. In the process, what we are essentially doing, rather than expanding the sector, we are squeezing it for revenue.
All right, Mr.
And exploration has become totally disincentivized.
Your counterpoint?
So, what was the purpose actually? When the auctioning was to be done, it was said that the data the exploration data will be used to the auction, and people will be told that this is what the resource is, you quote for this. After this has happened, the enmity fund came and private explorers were banned from exploration, and nothing has happened as of now.
Okay.
So, the 0.5% of the exploration bill, global bill, is spent in our country. What we do in our country is less than $100 million are spent. If you look at some of the countries like Australia, Canada, other mining countries, they spend something like $5 billion to $10 billion of the bill.
Okay.
And we spend 5.5%. So where is the data to auction?
Okay. That's a fair point.
So if you look at that, if we go for the auction, whatever the blocks have gone for the auction, let's suppose the copper blocks, gold blocks, some other blocks have gone.
Yeah.
We did not get even 3 offers, and we had to annul it.
Fair point. Let me get Roberto's view on this. Roberto, what do you think can be done? How can the government leverage its role in improving the natural resources picture that it has? What's your view on this?
Well, first of all, I would like to underline the importance that we look at what is happening in the world in terms of what we call the fourth industrial revolution. So there is new material and new needs, or for different quantities, if you like, on material. So first of all is on what, right? So there is an evolution of the market that is important to keep in mind. In general, for us, market distortion are always a challenge, because when you distort on one direction, then all the ecosystem get distorted. So our view, and now I'm referring to the energy piece, but this when we measure how country performance how countries are performing, we very much look at no distortion in the market, but rather setting clarity on the direction. And as I was saying, in particular in this period, with the digitalization of the system and the opportunity of new material, is really focusing on that. The other element that is important is when we look at industry like mining, but also oil and gas, the contract with the country is a bit different than in the past when you think at the need for human resources, because with the digitalization, less resources are needed.
Fair point.
And maybe or different competences.
All right, Roberto. On that note, we'll wrap up this special presentation on the Global Natural Resources Conclave 2018. But we'll have lots more to discuss. Stay tuned to CNBC TV 18.
Focus, ideate, innovate, enable.